Hey, it's Dan Murphy. I spent $6.2 million building machine learning tools so you don't have to. And boy, what you discover with these tools is quite amazing. It's eye-opening when you look at the plumbing of the markets. We look at weird data. That's what has a tremendous edge. And you know what? Last week, we were talking about Nvidia. So let's talk about it this week. I was telling you to buy. Nice buy signal in the face of all this craziness. And let's see what it's saying today. The exact opposite. So it's saying sell is what it did this morning and then went back into PSQ here. There's actually quite a theme here. And so what I'm going to do is let's see how big of a gain was that? Well, I guess it won't show on here today until we get the quotes, but there was a gap up basically to about entry level over there. But let's look behind the scenes at a whole bunch of strategies at once. This is Wall Street's only free lunch when you trade several strategies together. This is like 20 strategies at once. This is overkill, but I like to use this as kind of an index. And so I'll click start and see that. Yeah, so this, we get about 20 strategies. Let me get this out of the way here. And you can see it went down and then came roaring back up over here. Those 2 days, that Thursday and Friday, was definitely a shock to the system. The markets were not expecting it. And you can see how a lot of people will get stopped over here and then they wouldn't have held and gotten out at that Friday rally the next week. That was a big one. Okay, so when you have these shocks to the system like this, a black swan is what they're typically called. It's whoever loses the least amount of money is who wins. But here's the cool thing is when these strategies, as the markets decline and they're no longer trending, I'm going to give you an example too as I do this actually. When they're no longer trending, what's going to happen is you'll go into mean reversion mode. And what's mean reversion? Well, let's say you take like a 4 or 5 day moving average of price, and you'll typically see price gyrate and oscillate around those things. You know, it's a damn shame that very, very few books this is just one library. I've got books behind me, in front of me, and then there's more upstairs in another library. And I've got 100+ trading books, and they're mostly all garbage because no one does the hard work of actually testing. And I used to have to program all this stuff manually, but nowadays the machine learning does it for me. And speaking of which, this strategy right here was in my book, Outfoxing Wall Street. And so let's take a look and see what it's doing right now. This is actually very informative. What it does is it switches, it's mostly an SPY when the markets are trending. So let me show you. It was so much smarter than 99% of economists. It just held through this entire trend. So as it trends, and then when it no longer trends, this is completely quantified. It basically is looking at about a 4-month lag. And so if the markets is still above the close about 4 months ago, I believe that's what it is. And then it's going to be in trend mode. But once it goes below that, it starts gyrating, starts trading back and forth. And you can see that it sold down here into a little rally. And then it started doing these mean reversion trades. So it sold right before all that craziness and then bought down here and then started doing some mean reversion, bought, and then it'll very likely, since the markets have gapped up today on Wednesday, it's probably going to be selling and getting into TLT. And speaking of which, let's take a look. This doesn't always happen. There's a time where stocks and bonds used to move together. And then a couple of years ago, they were definitely moving together. They're highly correlated. But you can see how it started doing mean reversion trade, buying down here, selling over here, bought here, sold over here, bought way down here, and then sold over here. So it's doing a pretty damn good job in bonds. But so that's really how the markets work, is specifically the stock market. It trends, and then when it's no longer trending, let's say it's below the price of a few months ago, and well, then it starts to gyrate back and forth, and that's when you can make a whole lot of money too. So I'm going to get back into the multiverse of strategies here. Let's take a look at what it was doing. It was very interesting to me to see this morning, and what it was doing. I'll go to this trade plan here. Let's say that you had $100,000. There we go. And what it was doing to almost all these sell limits. So this is kind of like fishing. You don't always get these limit orders hit. They're basically at the closing price plus a couple percent or maybe we use average to range. It really depends on the stock itself. And we just put the limits up there, just waiting for it to get hit. And a lot of these limits got hit this morning, like Microsoft. Boston Scientific had a huge gap up, hit. And XLK, I know, and QLD, this long QQQ, the S&P, or the NASDAQ 100 rather. And Starbucks, I don't think I looked at this one yet. So this might have got hit as well. Like I said, we sold out of Nvidia. So it was about a break even, maybe a slight profit on that. SMCI was really getting close to this limit order, hasn't hit it as I record this, or maybe it has. But here's the really interesting thing, is while everyone else is probably going, oh my God, this is great. Now we have this up green candle and things are rosy again, and we've bottomed. We just got into a bunch of inverse positions. So I'm gonna check this off. And we can see, remember, I'm using $100,000 here, hypothetical. And by the way, all this is considered hypothetical. But what I've learned is that you have to do back testing. Otherwise, how else do you prove your assumptions, right? And so I'm not going to get in today, but maybe in another video, I'll talk about all the hoops that we go through for leaving data out. 2 sets of data to make sure that we're not overfitting to the past, because computers love to overfit to the past. So that's the caveat. But so it got into 20% this morning. A bunch of these stocks sold out and got into inverse funds. We don't ever short, by the way, because shorting gives you unlimited risk. Just ask anyone that was shorting GameStop. Oof. Yeah, it gives me the heebie-jeebies. Skin crawls thinking about that. So you can one stock can wipe out your whole portfolio, even if you have 100 stocks. So about 20% in the PSQ, that's the inverse NASDAQ 100. We got a double 2x inverse S&P 500, so about $5,000 in there, so that's about 25. And then SH is just your 1x inverse. That's about 30% of the portfolio this morning on that gap up. New to get into that. So we didn't have much inverse at all going into Wednesday, but now we're loaded up about 30%. That's pretty decent sized. So like I said, just putting all this together is what I'm looking at is the markets, now that the trend has been over since about March 15th. And so now we're going to see those whipsaws, those mean reversion. Most people think in terms of breakouts and breakdowns because they don't do the hard work and they don't understand that the market's completely changed in 1982 with 500 to 1 margin was finally offered in S&P 500 futures contracts. Now it's down to about 50 to 1, but it's still the exact same idea, is that there's just so much leverage in these short-term moves. And I swear to you, look around on YouTube and 99% of the people that you're going to watch and you're going to listen to don't do any testing. They're not going to tell you odds. They don't tell you win percentage. In fact, they'll pull that out of their butt. So with machine learning, we're all about the odds. Isn't it funny though? So they'll talk about sports betting and they'll understand odds and the over-under and everything else. And then when it comes to the stock market, they're drawing lines on charts and looking at imaginary patterns. Those patterns don't exist. It's pareidolia. I'm the guy, you heard the rumor, that I spent $300,000 in 18 months and 2 other employees. I didn't even include my salary in that. And we were building the ultimate pattern recognition machine. That's when we got into cloud computing and linking computer networks together, thousands of computer cores. And we discovered it doesn't work. As soon as you objectify patterns, it all falls apart, man. So we're doing something completely different. Most of the signals here are generated by weird data like ETF mispricing. Most people never even heard that, but we fed it to the machine learning. We've done dark pool data is our latest thing. Go ahead and look in the link in the description here. There should be a link under this video. And I'm sure I'll have something free for you just to introduce you to my world. I'll catch you later. Let's see if the market does indeed go down, or it could be soon that we reverse course and start buying again. I love trading, man. It's just think of trading as a crazy uncle that one day is loving the markets and the next day he hates it. See ya.